From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 11th, 2017. Today we're going to be taking a look at the USDJPY, the US dollar, versus Japanese yen for today's trade analysis. Now, it's not too hard to see by looking here at the daily time frame that this currency pair has been in an uptrend. All you have to do is follow along the black trend line as it's been rising from all the way down here into the 108.30 or so level at the very bottom of the chart, up now into the 113s and 14s. So it's been a clear uptrend. Throughout the uptrend, we've been watching for opportunity, breakouts of resistance, dips into support, for an opportunity to get into this uptrend. I think there's an opportunity today with the intraday to get into a long scenario in the direction of the trend. The pattern, as you can see here, has been a rise, congestion in the box, a rise, congestion in the box, a rise, and now I think we're looking for that next phase, that congestion phase for the US yen. Back here on the left-hand side of the chart, you can see the blue circle where the market got above the yellow zone, dipped back down, sat down on it for about 3 days on top of the yellow zone, and eventually made its new high all the way up into the 115. So this blue circle is what I'm looking for a duplication of that over here on the right hand side. The difference over on the red circle is that there was a sudden infusion of sell orders indicated by that long wick on the top. It went all the way up to the green zone, sudden infusion of sell orders. The next day opened straight up and went down through the yellow shaded area. So you see this pair, or this time in the blue circle, hit the green zone, fell down, didn't break the yellow zone, couldn't get back underneath it, sat on top of it, and the momentum shifted to go back up. So that's what we're looking for over here. We don't really see a significant sell-off. Sure, today's candle's red, and we saw that over here in the blue circle as well, but we don't see that indication of a sell-off. We don't see the shooting star candlestick, the bearish engulfing candle really strongly developing yet over here on the right-hand side. So as long as it's above the yellow zone, like it was in the blue circle, I'm looking for a long scenario in the direction of the trend. I'm often looking, and we talk about this in the trade room, an open and close above resistance, and we can see that yesterday's candle did open and then close above the 113.90 level, and that's the area that we were looking at. We also, if I zoom out one more time, take Fibonacci high to low of the blue trend line, and we find the 786 Fibonacci retracement level sitting at 113.92, and yesterday's candle opened and closed above it. Today we opened, now we're retesting back into that yellow zone as support. All of that in the direction of the trend. And one last thing is we have finally pushed back above the 100 period simple moving average again, which may lead us to believe it's going to continue that rising pressure. Let's go ahead and take it on down to the 4-hour time frame, and as we get down here we can see the market broke above it, came back down, rallied. In fact, we took the buy yesterday at 113.90. You can see the little line there, the blue dash line with the little red arrow. That represents our trade manager from yesterday. We bought it at 113.95. It went up pretty nicely. We saw the market go up from our entry yesterday, went up about 42 pips, 43 pips, and we had an opportunity to lock in some profit. And you can see the trade manager actually closing that closer towards the 114 level, giving us a lock in of 5 pips. Even though it came back down, we protected the trade as it moved back higher. Now we're looking for an opportunity to get back into it. I am actually already back into it at 113.85, about 10 pips better than yesterday as it dipped down here into the yellow shaded area. I'm looking for the market to hold the yellow zone as support, as it has back here, and we looked at that blue circle in the direction of the trend. I'm looking for it not to get back underneath the yellow zone. That's our risk. Our risk is it breaks under the yellow zone, the black trend line, and starts going lower again. So we don't want it to do that. We don't want it to get back underneath the yellow shaded area. If it does, we want to get out of it. So our stop loss, about where that red line is, let's see. We're looking at about, from the 1385 or so level, we're looking at about a 30 pip stop loss. Let's go ahead and set up the trade manager here just so we can be sure that that's all set up. I'm going to set it up as a 30 pip stop loss. So what we do is we set our absolute max loss at 30 to take the place of our stop loss, and that will manage our stop loss now. So what that looks like is if it sees 20 or more pips, it moves me to break even. 40 or more pips, it moves me into 5+ pips of profit. That's what happened on yesterday's trade op. So here we are into that level again. The risk is 30 pips that it breaks through the yellow zone and goes lower in the direction of the trend. A turn higher again will target, once again, back into the mid to upper 114s. That's the green shaded area that sits up here at the top of the chart. So our target is the green zone. Our risk is the break of the yellow zone. Buying support in the direction of the trend, and looking for the US yen to continue to rise today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.